Welcome back, everybody. Today we'll talk about IBM's earnings. Welcome back to the Financier. My name is Vijar. We go over technology, earnings, investing, economics, whatever's on your mind in the markets. I try to cover quite a bit in cloud strategy. So I'm really excited to talk about IBM. They have a really big 2020. Obviously, a new CEO has come in. There's been a lot of changes in the last 12 months with the cloud strategy. A lot of people have gone online completely. So we'll talk about that. We'll talk about what they're doing for 2021. They've had a pretty record big year so far. They look like they're on track to meet the 2021 revenue targets. Arvind Krishna spoke yesterday about what's happening with the company. So there's a lot of excitement going on. So without further ado, we'll begin. If you got any questions, comments, concerns, feel free to just reach out, comment on the right or below, wherever you're streaming in from. Let me know what your thoughts are on technology, cloud, and IBM. I love to hear your thoughts on the industry. So to start, Red Hat acquisition, which Arvind Krishna, the current CEO, led. He did a fantastic job integrating the business. It is the reason why he's CEO today. The company's seeing more than double-digit growths, very high double-digit growths with Red Hat. It's the core asset for their business to deliver hybrid cloud. It's something that they've been honing on for the last 12 to 18 months since Arvind has been CEO. So we saw that in the last fourth quarter, they saw an improvement in the spending. Spending environment has just increased for cloud. It was pretty relevant in the second, third quarters of 2020, but it's still improving in the last quarter. We're seeing a lot more increase. I'll go over a couple of the divisions that have done pretty well. At least they turn around, and then we'll talk about what's being spun off and the areas that they might have to sell, which I think will be interesting to talk about. So first up is the Cloud Technology Services division. That's actually about down 1%. So that's $6 billion business. It's one of their big businesses. The cloud and cognitive software piece is up about 4%. It's about $5.4 billion. And another piece which hosts most of their cloud revenue is Global Business Services, which is up about 2%, and cloud revenue is actually up about 33% at around $4.2 billion. So it's a pretty big deal for IBM. They're doing a really good job. They received a lot of strong interest in their financial services division. I think that's probably related to blockchain, Bitcoin, and a lot of things that are in the crypto world. They do a good job writing the white papers and producing the developer content in the blockchain world. They've done it since 2015, 2016. They've definitely been on top of this. I don't think they've monetized it in the way they can, but they're a gigantic business, so you can get lost between the hybrid cloud, Red Hat acquisition, and what's going to be spun off, which is now known as Kindred, which we'll talk about in a few minutes. So those areas in cloud, they've just seen high growth. I think the hybrid growth strategy is the right way to do it. I think Arvind is doing a terrific job just getting into this role. I think we're seeing the early innings of this hybrid growth, but I think it's important to talk about the switch that's happening in his position. So one of the biggest problems with the company today is that they're getting valued between the cloud revenue, which is more software and reoccurring, and the services revenue, which is much more a lower margin, lower growth business model. So the new co, which they're spinning off, is a gigantic business in itself. I think it's larger than most private IT, MSP services as a standalone business. So once they split these two businesses, you'll see the IBM's core business, the hybrid cloud strategy, is going to increase in value. And the new co will get, just as a spinoff, will be valued very differently. It'll be a lower value multiple, but I'll talk about some of the key aspects of that business that are very attractive soon. So you can see here in this graph that there's a split in the types of businesses that the services they deliver, from digital transformation and migration on the core IBM hybrid cloud platform, And the new co is going to be focused more on infrastructure modernization, more migration, cloud migration work, a lot of talent, people related versus product related. So I think that's a big jump in that division. I think it's important to do this. So this is the name of the new brand. I'm not a big fan of it, to be honest. I think it sounds like Benadryl or something. It's very confusing to even read. But Kindred is the name of the company. This is where they're heading. If you've heard of competitors in the space, there's obviously quite a bit. Last week I talked about Toshiba's IT services division and their solution strategies and how they grew that business. And then a lot of other competitors that are definitely taking advantage. There's a lot of M&A that's happening in this space. So there's no surprise that this is an attractive target to spin off. So on that note, Kindred looks like it's going to be spun off before the end of the year in 2021. They have about 4,600 customers. And the amazing thing you saw before, they have $19 billion in revenue at the current point. They actually have $60 billion in backlog revenue. So it's a very strong business model, even if it's reoccurring like software, but it has a lower margin and a lower growth profile than the hybrid cloud strategy. So that's the reason why they have to cut off the division. But Kindred is a very big business, 60 billion. We're talking about 3-4 years of just contracts locked in on top of what they're $19 billion they're currently doing. So it's a gigantic business. Speaking of spinoffs, they didn't mention it this time, but they did mention it 1 or 2 months ago, I think in February, about the Watson health division. Their Watson computing group. They made a big show of it a couple of years ago, but it really didn't produce much as a result for the business. And it seems like they may have to sell off this division. It's just not producing the type of products or profits that they need. And I don't think it aligns with the current strategy. So I don't think they have the ability or the courage to sell it, but I think they probably will have to shutter it down because Watson has just not made any big results for the business so far. So it's too bad, but I think that's the case for the business. If you use Watson or you use any of these other products, I'd love to know what your thoughts are. So again, Arvind Krishna has done a terrific job, strong performance in the cloud division, seeing a lot more clients adopt it in the hybrid cloud. And I think their software and consulting businesses will just continue to thrive. So I want to cover that because it was a pretty exciting call. All the analysts increased their price targets. I think there's just so much demand for this business. That's IBM has been around for over 100 years now. I think they started in the mid 1910s, 1919, and they just have a good business model. It's just stood the test of time. It's gigantic. I've talked about the size of the business before. They produce billions of dollars in profit, and they're just a gigantic business worth over $100 billion. So I don't think this company's going anywhere, and they just actually are at the core of cloud computing, infrastructure, and networking. So I want to wrap this up, talk about cloud, IBM, and their earnings. If you have any comments, questions, or concerns, let me know. If you've seen anything in this industry or this market, I'm trying to find more content, find more ideas. Always subscribe and share if you haven't checked out The Financier at thetechfinancier.com and on the YouTube channel. But then again, we'll talk about more M&A deals in the space, tech, cloud, and software. So if you have anything on your mind, always feel free to reach out. Take care, everybody.